Have you ever wondered how organizations uncover complex financial frauds, hidden transactions, or manipulation that even regular audits fail to detect? That's where forensic audit comes in, the investigative backbone of financial integrity and corporate truth. Unlike a regular audit that focuses on verifying financial accuracy, a forensic audit dives deep to uncover fraud, corruption, and misconduct. It's not just about numbers, it's about following the money, reconstructing events, and finding the intent behind financial crimes. In simple terms, forensic audit is where accounting meets investigation and law, definition and purpose. A forensic audit is a specialized examination of financial records to gather evidence that can be used in legal proceedings. The main objective is to detect and investigate financial irregularities, identify those responsible, and help organizations and regulators take corrective or legal action.
While a statutory auditor expresses an opinion on whether financial statements are true and fair, a forensic auditor's mission is much sharper, to uncover who did what, when, how, and why.
Such audits are usually conducted when there is suspicion or allegation of financial statement manipulation, misappropriation of funds or assets, bribery and corruption, embezzlement or vendor kickbacks, money laundering or fund diversion, cyber-enabled fraud or digital asset theft. Legal and regulatory relevance. Forensic audits are legally sensitive and must adhere to strict procedures. The findings often serve as evidence in courts, regulatory inquiries, or internal disciplinary proceedings. This means auditors must maintain chain of custody, preserve data integrity, and follow documented investigative protocols. The reports of forensic audits are often used by law enforcement agencies for prosecution. Regulators like RBI, CB, or SFIO in India, courts and tribunals in civil or criminal cases, corporate management for disciplinary or preventive measures. Phases of a forensic audit. A forensic audit generally consists of 5 well-defined stages. Planning and scoping. Define the purpose, identify the suspected fraud, and determine the time frame under investigation. Planning sets the tone. Auditors decide what data to collect and what investigative path to follow. Data collection and preservation. This involves securing all relevant evidence, financial statements, invoices, bank records, contracts, emails, and digital logs. Evidence must be preserved in its original form to maintain legal validity. Digital forensic tools like EnCase, FTK, or Magnet Axiom are often used. Data analysis. The core of the forensic audit, analyzing data to identify red flags, suspicious transactions, or unusual trends. Techniques include Benford's Law, ratio analysis, journal entry testing, and transaction tracing. Tools like IDEA, ACL, Power BI, and SQL-based analytics help auditors detect anomalies efficiently. Investigation and interviews. After identifying irregularities, forensic auditors interview employees, management, or vendors to gather context. They assess intent, corroborate evidence, and evaluate the tone at the top, since many frauds stem from poor governance. Reporting and legal support. The final stage involves drafting a detailed forensic audit report that includes facts, evidence, loss quantification, modus operandi, and recommendations. The report must be factual, clear, and defensible in court. Practical examples. Procurement fraud. A company repeatedly awards contracts to one vendor at inflated rates. A forensic audit may reveal that an internal employee was receiving kickbacks in exchange for approvals. Financial statement. Manipulation. Management overstates revenue or defers expenses to show profits. Through data tracing, forensic auditors expose such manipulation. Employee embezzlement. Funds may be diverted through fake vendor accounts or ghost employees. By reconciling bank records and vendor master data, auditors identify fraudulent activity. Forensic audit in the Indian context. In India, the demand for forensic audits skyrocketed after scandals like Satyam, IL&FS, and DHFL. Regulators like the Reserve Bank of India, RBI, now mandate forensic audits for large loan defaults or suspected NPAs. The Companies Act 2013 also requires auditors to report suspected frauds directly to the government, reinforcing the need for forensic investigation capabilities in organizations. Difference between forensic and regular audits. Regular audits aim to ensure financial statement accuracy, while forensic audits detect and investigate fraud. Regular audits use sampling and testing. Forensic audits proceed from suspicion and focused investigation. The regular audit output is an audit opinion. The forensic audit produces legal evidence and a forensic report. Regular audits serve shareholders and regulators. Forensic audits serve courts, enforcement agencies, and management. For evidence handling, regular audits maintain standard documentation, whereas forensic audits require a documented legal chain of custody. Challenges faced in forensic audits. Limited access to data or non-cooperation from management. Concealment or deletion of digital evidence. Complex transaction layering or offshore fund trails. Tight deadlines under regulatory pressure. Maintaining confidentiality and integrity of evidence. Conducting a successful forensic audit requires patience, legal awareness, and investigative creativity. Now that we understand what a forensic audit is, let's explore how you can build a successful career in this high-demand and exciting field. 1. Educational foundation. To start, you'll need a strong academic background in accounting, finance, commerce, economics, and computer science if you're interested in digital forensics. A bachelor's degree in any of these is sufficient to start. However, understanding both financial systems and technology gives you an edge. 2. Core skills. You must develop. A forensic auditor must master a unique mix of technical, legal, and soft skills. Technical skills, financial accounting and auditing principles. Data analytics, Excel, SQL, Power BI, Python. Fraud detection techniques, digital forensics basics, log analysis, evidence extraction, legal and investigative skills, understanding of evidence admissibility and chain of custody, knowledge of anti-fraud, AML, and corporate laws, interview and interrogation techniques. Soft skills, critical thinking and skepticism, ethical judgment and confidentiality, clear report writing for legal and executive audiences. 3. Key certifications to pursue. Here's a roadmap of certifications that build your forensic credibility. CFE, Certified Fraud Examiner. ACFE, globally recognized credential for fraud investigation and prevention. CACPA with forensic specialization gives you deep financial knowledge and statutory audit credibility. CISA, Certified Information Systems Auditor, adds IT control and system audit expertise, useful for digital investigations. Digital forensic certifications, like ENTS, CHFI, or GCFA, ideal if you want to handle cyber or device-based evidence. CAMS, Certified Anti-Money Laundering Specialist, perfect for those dealing with financial crimes or banking investigations. ICAI Forensic Accounting and Fraud Detection, FAFD course, India-specific specialization combining accounting, analytics, and investigation. Tools to learn. To analyze large datasets efficiently, master these tools. Excel, Advanced, ACL or Caseware IDEA, Power BI or Tableau, SQL and Python for data analysis, and digital forensics tools like Ncase or FTK. Being tool agnostic helps you adapt to any organization's investigative technology. 5. Gaining practical experience. Start by getting into roles like internal audit, risk management, compliance or investigation support teams. Once you gain exposure to internal controls and data review, move into forensic audit or fraud risk teams. If you don't have access to real investigations yet, create mock case studies using sample financial data. Analyze anomalies, identify red flags, and prepare a forensic-style report. Participate in fraud simulation workshops or CFE chapter activities. These projects enhance your resume and demonstrate your forensic mindset. Typical career path. Entry-level, audit associate or risk analyst. Mid-level, forensic audit associate or investigator. Senior level, senior forensic auditor or fraud examiner. Leadership, forensic manager, head of investigations, or expert witness. With 5 to 7 years of progressive experience, forensic auditors can move into advisory, regulatory, or consulting roles with Big Four firms, banks, and government agencies. 7. Resume and LinkedIn tips. Resume highlights. Perform transaction tracing and vendor verification to detect duplicate payments. Used ACL Power BI to identify anomalous entries and quantify potential fraud. Prepared forensic audit reports suitable for legal review and management action. LinkedIn headline. Examples: Forensic Auditor, CFE, Financial Investigations and Data Analytics. Forensic Accountant, Fraud Detection, Risk and Compliance Specialist. 8. 2-year action plan to become a forensic auditor. Month 06. Strengthen accounting knowledge, Excel, and internal control understanding. Month 6 to 12. Learn Power BI or IDEA, start a CFE prep course, and work on a sample case. Month 12-18. Attempt CFE or local forensic certification, join forensic audit projects, or assist in internal reviews. Month 18 to 24. Build a professional portfolio, publish case insights on LinkedIn, and apply for forensic audit or risk consulting roles. 9. Challenges and rewards of this career. Challenges include handling sensitive evidence, managing pressure from stakeholders, keeping up with changing fraud schemes, maintaining confidentiality and ethical integrity. Rewards: deep intellectual satisfaction in solving real-world frauds, high demand across industries, consulting, banking, and regulatory bodies. Excellent compensation and reputation as a specialist. The impact of contributing to corporate integrity and justice. In an age where financial frauds are sophisticated and global, forensic auditors are the guardians of corporate truth. They not only uncover the how behind frauds, but also prevent future manipulation by strengthening systems and governance. Becoming a forensic auditor isn't just a career path, it's a commitment to truth, integrity, and accountability. If you have a mind that's analytical, curious, and ethically driven, forensic auditing can be one of the most rewarding and impactful careers in the financial and cybersecurity world. Thanks for watching Audit Decoded by Mayuri, where we simplify complex audit, risk, and compliance topics for professionals and students. If you found this video insightful, make sure to like, share, and subscribe to the channel for more in-depth videos on auditing, cybersecurity, and risk management. Until next time, keep learning, stay ethical, and continue decoding the world of audit with me.